Good morning, Mr. Khurram.
Hear me?
Hi, how are you?
All well, all well. Chalo, good to know you. Good to at least see you. Just a minute. Let me choose my background.
Hey,
Okay. Actually, I have the presentation with me. If you want, I can. everybody's awake. I know it's Sunday, and I'm glad to have all of you here. And it is just that I may have come to the world a little before all of you and little more experience than you. Otherwise, trade finance is a simple concept. And my premise will be to introduce to you some of the basic concepts in trade finance. So as far as this presentation is concerned, this session is concerned, you can say if for trade finance, a basic level course, there are obviously advanced and intermediate and advanced level courses as well. So this is just to introduce you to the implications that are there in trade finance. What are the method of payment and why do we need to trade, and what are the nitty-gritties of each method of finance? So to begin with, let me, if I hope you all can see the screen. See, I will take you to the first screen. And as you see, during COVID time, the entire world was impacted. People came to a standstill. The business activity slowed. So having said that, first of all, to begin with, why do people or countries need to trade? Now, you could have some economies like India, like Pakistan, like Southeast Asia, they are agrarian economies. You have a free fall of, you have 4 seasons. You can have you have a crop season, you have a harvesting season. On the other hand, there are certain countries like, for example, Middle East, which are rich in resources like oil, Qatar gas. Some countries of Far East, maybe in some soya beans. And so every country has got what it's called its own competitive advantage. Every country may not have everything, but all the country have everything we need to survive together. Hence, what one country has, it has an advantage over the other countries. That's a resource it has, which it trades. Like over here in Middle East, we have abundance of oil, and hence we trade it for other products which are not cultivated here, like the food products, right? Rice, like pulses. So that is why countries need to trade. And the topic of this presentation will be international trade, which is across borders, across countries, because that's where the methods of payments come into play. So having said that, as you see from the graph, during COVID time, the trade volumes decreased, and now after like 2022, March 2021, they are rising up and steadily rising up, and hope they continue to rise. Having said that, I will take you to the next screen. Now, if you know what's happening in the world right now, 4 banks in America, they have, I will not say they have declared bankruptcy per se, but they have what they call a depositors run. Like everybody's asking for their money because people are skeptical about their bank's future. They are saying the bank will not get the money back. And hence there is a prospects of a recession coming. That's why you see these dotted lines getting down and down. Like post-COVID, there was a burst of activity. Things started moving. Prices of commodities skyrocketed. Having said that, they are all now decreasing. They are all now projected. We are expecting a slowdown, if not a recession. When things are going fine, everybody is having bigger size of the cake. Everybody is having more to eat, more to spend, more to save. Everybody is happy. But in bad times, in crisis times, in recession times, in slowdown times, when the size of the pie does not increase, in fact, it could decrease. Your income could decrease. You could have job losses. You could have people on the streets waiting, wanting food in various countries. So that is why in bad times, in recession times, you have to be very careful about each and every expenditure that you make and each and every transaction that you do. And that is the importance why we need to study trade. If it were good times, it was pleasant times, it was boom time, everybody's making money, everybody's happy, then people don't care that much. We can just go on with your life as it is. But in crisis time, in recession time, you have to be extra careful, and that's what why the study of trade finance, exactly what it happens, how it happens, is important to all of us. Okay, I'll go to the next slide, which basically starts with introduction. What is, first of all, trade finance? What is this thing called trade finance? You can see the slide, but I will explain to you what the slide is saying. See, as I told you a while back, basically some countries have competitive advantage in one resource, some in other resource, and we are abundance in oil. Agrarian economies like India, Pakistan have abundance in agricultural products, fruits, vegetables. See, so we exchange. They get oil, we get the food products. So international trade is a movement of goods between importer in one country and exporter in another country. Now, to clarify the matter in order to for you to understand this transaction, this presentation better, just keep two things in your mind. Whenever you hear the word importer, importer is the buyer. Importer is the buyer. Now let's say that you go, an exporter is the seller. It's that simple. You go to a supermarket, you take a bottle of water. Let's say that you are the importer, he is the exporter. Well, it's not that simple, but for me to clarify the concepts further, I just take it like that. Importer is the buyer, exporter is the seller. Simple. Importer, buyer, exporter, seller. That will take me through the that will help you with the presentation better. So international trade is the movement of goods between importer in one country, exporter in another country. Yes, someone has to buy and someone has to sell. Inland and domestic trade is fast becoming a reality. Okay. Now what happens is that whenever you think of trade, you think of ships moving, you think of containers. That's what the first image comes. However, having said that, now there's an increased reliance given the oil price. Now at the moment they are low right now. But because of the increase in oil prices, or people, because of the Russia-Ukraine issue, people don't have access to the oil. So that is why land and the domestic. Yes. Hello. So inland and so basically the trade via the domestic trade via the land route is also becoming a reality. And facilitation cross-border trade is one of the most important. So what do the banks do? What do the banks do? Banks over here basically, now seller is in one country, buyer is in another country. They may not know each other. They could know each other. They may not know each other. Or there could be some country related risk, there could be currency related risk, there could be people related risk, there could be documentation related risk. So that is why the importance of banks also come, which I will take you through as we proceed. Okay, now importer and exporter. As I said, basically to make it very simple, importer is the buyer and exporter is the seller, right? So exporter wants to deliver goods and receive payment as quickly as possible. Absolutely, if an exporter, let's say a rice exporter sitting in India, is wanting to sell rice to Almaya supermarket in UAE. So the exporter, the seller, let's name him as you can say KC Limited. KC Limited wants to sell rice to Almaya supermarket in UAE. So I am the exporter, I am the seller. So I, sitting in India, want to deliver goods and receive payment as quickly as possible, eliminating if possible credit or payment risk. All I want is that my goods reach the Almaya supermarket in the proper time, proper manner, without damage, and I get the payment in due time or before time, preferably. The importer, that's Almaya supermarket, want to ensure the reception and quality of goods, eliminating delivery risk. Okay. Structure is favorable thing. So what is important for Almaya is that if they order 5 tons of rice, the quantity basmati rice they want, the quantity in the way they want, the packaging they want, the time they want, they can get the rice in required time. So it is that way. Okay, importer is the buyer, exporter is the seller, and each of them have their own needs, which I will zoom in further their needs. Now, if you see, this is their summary of the basic needs. Now, I will tell you, this is fine. This is a presentation, very nice, colorful slide, but I'll tell you exactly what it says. Okay. So basically now KC Limited is in India. He's the seller of the rice, which is he's the exporter. Almaya supermarket is in UAE. It is the importer and it's the buyer of the rice or the importer. Hence, what are their requirements? First of all, the thing is, now I am here. I'm a small trader sitting in India. Almaya may be a big name in UAE. I may not know it, so I don't know whether Almaya is going to pay me on time. Almaya may not know whether a case is going to deliver the rice in the way in the quantity they want, the type they want, the quality they want. So that is why the first is risk mitigation, right? Banks, like, what do they all do? There's a risk involved of people, documents, payment. So risk mitigation is one of the primary responsibilities of a bank when they come into play between buyer and the seller. So, that is why to mitigate there is this letter of credit, credit confirmations. We will go into each of these methods later on as we proceed the presentation. Political risk, standby letter of credit, risk defense description, US exim LCs. Okay. Financing. Now, I as a seller, as an exporter, I have to arrange for rice. So I have to buy rice from somewhere. So even I need financing as an exporter. Almaya has to buy rice from me. They will also need financing. So banks also provide financing solution. Almaya from their banks, me from my bank. So financing, the pre-shipment financing before the shipment, that is for the exporter for me. Post-shipment, once I've shipped it, it reaches. Now Almaya needs to arrange financing. Discount bills, notes. This is one of the ways how you can collect money from the bank. Receivable, payable financing, supply chain finance, ECG based program. So these are the ways bank will help you finance both for the exporter and importer. We will, don't worry, we will go over these methods in detail as the proceed. This is just to give you the flavor of what's going to come. Settlement. So once I have given my goods to Almaya, they have reached Almaya. Almaya has got them from the ports. It's there in their godowns. So now, how will these settle between us? How will they pay me through their bank? I receive from the bank. So settlement also banks have. And most important information. Most of you must have ordered something from Amazon or from Noon, and you track your parcel by where is it going, how is it going, where it has reached. So when you do through the bank, there's a voyage journey and there's a documents journey. Like you ship your goods you put your I will ship the rice via a ship. The ship may take a month, 2 months, but my document which I send may reach them in few days. So there is a tracker both for the voyage and for the thing. So this providing of information. Then the thing is, where is the okay now? Also very important part is that the customers also want a detailed MIS. Both importer and exporter would like to have a detailed MIS. Okay, we gave you this document, the type of documents involved, when did we give you, when are they going to clear? So all these are also functions of a bank. Now proceeding. Now again, I'm just zooming in further what we have discussed earlier as well. Okay, the risk exposure for exporter. Exporter, as I told you, is a seller. That is KC Limited sitting in India selling rice to Almaya supermarket. Now I have rice with me. I have to send it to Almaya supermarket. So let's see the first risk, commercial risk. Commercial risk is a business related risk, i.e. if I give the rice to Almaya supermarket and then they don't pay me, or then they say, okay, fine, yeah, we didn't want basmati rice, we wanted some other rice, we wanted Kashmiri rice, or they have a different type of rice or different quantity or quality of rice in thing, right? FX risk. Okay, FX risk is the currency fluctuation. That is, I make my arrangement in INR. Almaya may pay me in dollars. Now it could be the INR, when I was doing it, 120 INR was not 80 INR was equal to $1. But when I gave the goods reached the Almaya supermarket, the INR depreciated. It became 100 INR to $1. So in that case, currency risk is there. Political risk, sovereign risk, political turmoil in important country. Like for example, currently there are certain countries right now in the world, like Sudan, like Russia, they are having issues, internal issues. So what if I supply the goods and some issue happened, like I gave the KC Limited in India, so supplied rice to areas, area Iraq, Syria, and then later on the situation worsened and my money was stuck. Right, political risk. Then transfer risk, foreign exchange controls. Like for example, this is happening in Pakistan right now because of the shortage of dollars. They are not allowing dollars to move out of the country. So I supply the goods to a customer in Pakistan, but because of exchange controls, I can't get my dollar back. Convertibility risk, not enough foreign exchange available. This is similar to the transfer risk, whereby foreign exchange controls are laid because there is not enough dollars. So hence there are not enough dollars. So that's also a risk. How will they pay me? Obviously, I supply them goods. USD is an international currency. So how will I get? Then legal risk, non-compliance with local regulations. Now this pertains to, there are certain items which are culturally sensitive or may not be allowed as per this. Like for example, we all know, things like ornaments, arms. They are not allowed. Then in certain countries, there are certain items like they could have a ban on liquor. They could have right now we have this thing called Russian oil is not acceptable. So Iranian vessels, there are certain conditions that were there. So that are there. The sanctions, basically the sanctions, the country in which I'm based in, like India, if it has some sanction requirements or sanction issue, or country where we are based in UAE, if they have some sanctions on any other country, so we have to abide by those laws as well. Okay, now this is the most important part and the crux of the present, methods of payment. Now I am KC Limited is in India, Almaya market in UAE. I have to transact with it. So how do I go around paying it? Now this is a nice colorful chart, and let me simplify and clarify to you what it means. It's actually very, very simple, and I will make it more simple just if you listen. You can look at it, but I will tell you how to it means. See, first thing is open account. Now, what is open account? Open account is like, for example, I am the exporter, that is the seller, KC Limited in India. I am going to supply rice. Open account means that I, without taking any payment from Almaya, I say Almaya, like for example, not let's say I'm supplying to Lulu, or I'm supplying to a very known, well-established name, Lulu or Carry Forth. I saying, oh, Lulu is a big name. I've got a big order from them. They are credible parties. I'm not going to run away. So what I suggest is, what I say is that, okay, fine, I will supply you 5 tons of rice, basmati rice, without taking any payment in advance. KC Limited India, 5 tons of rice, I supply it to Lulu Hypermarket or Carrefour or Spinneys, big names. I say, okay, fine, you're a big name, I trust you. You can take this first and you pay me 2 months later. That's open account, wherein supplier supplies first and does not get the payment later. Without taking any money, you supply. Exact opposite to open account is the one that is on the 4th number, cash in advance. In cash in advance is the exact opposite. Now, KC Limited in India has to supply to, you can say, some small bakala shop over here. So I say, I don't know you at all. So you first give me all the money, give me 100,000, 1,000,000 dirhams. Then first you give me the money and then I will supply the goods because, obviously, I don't know you and this and that. Both in open account. Okay, now you see these arrows on the right and the left hand side. On the left hand side, there's an arrow which says risk of non-payment, exporter risk on the bottom and high on the top. On the right hand side, you have an arrow pointing downwards, right, which is opposite of the error on the left hand side. Now I'll tell you what it means. For example, if I'm supplying, KC Limited India supplies rice all advance to Almaya Supermarket or Carrefour. So for me, I'm the exporter, my risk is the highest. That's why it says high and the arrow is on the top. Opposite of it for the importer, for open account, it will have the lowest risk because I've got the goods, but I don't even have to pay it. Let's take it to the fourth thing, cash in advance. In cash in advance, exporter, I am the seller. I've got my cash, so my risk is the lowest. So that's why I'm the bottom end of the arrow. On the other hand, for the importer risk is the highest because he has given the money without the goods. Okay. In between, we have 2 things called documentary collection and letter of credit. Now, documentary collection is where without having like bank is involved in all 4 of them, but the extent of their involvement is different in all. Right? In open account, I have an account. I'm in India. I have an account with the State Bank. I just give instructions. State Bank pay Almaya Supermarket this much money. Bank is involved as far as my account and the transfer of money is involved. For documentary collection, I actually ship the goods, give the documents to the bank. My bank supply. I will give you. We will delve into details of each of them as we proceed with diagrams and all. Basically, just to give you right now, to give you the flavor, documentary collection is where without opening a letter of credit, the documents flow through the bank. While in letter of credit, a bank, the importer, the person who's buying, he goes, applies for a letter of credit for KC Limited India. That's the difference. While in documentary collection, there's no LC which is open, only the documents flow. We will delve in as we proceed. So as I mentioned, now I'm going into the details of each of these methods as we proceed. So first is cash in advance. Hello. So in cash in advance, you can say you see number one. Number one, you see buyer. Buyer you say is Almaya. Yeah, I think can everybody put their mic on mute? I think one of the mics is not on mute. Hello? Okay. See, what happens is that in number one, buyer is the Almaya Supermarket and seller is KC Limited in India. Buyer first places an order of 5 tons of rice from KC Limited in India, and buyer Almaya Supermarket is in UAE. What I do in cash in advance, okay, number 2, buyer has to pay everything before. So he goes to his bank. Let's say buyer is over here, Almaya Supermarket. His bank is NBF, National Bank of Fujairah. It has an account with National Bank of Fujairah. It gives the money, 1 million dirhams to it, and then NBF, exporter bank. Let's say I'm in India and my bank is State Bank of India. So they send the money via online payment to or TT, telegraphic transfer, to my bank, telegraphic transfer, and then I receive the payment and then I ship the good later. Fine. First, I receive the order. I receive the order. He's giving me the payment. Payment third, send the payment. Fourth, I have payment receipt, and the fifth is ship the good. First, I receive the payment and then I ship the goods. Right. So now let's drill in further. Okay, what are the benefits and advantages from exporter's perspective? Exporter means, I told you, the seller. That's KC Limited India. For me, payment risk is completely eliminated. I've got all my payment before. So payment risk is eliminated. Use of fund before the shipment goes out. So even now, since I've got the funds, I can use the funds even before the shipment, before shipping. I can use the funds anyways. In fact, to buy my rice, I can use the funds and ship when convenient, because I've got the money. Now I'm under no obligation. If you have to ship it now. Usually the date is decided. If I'll give you the money, usually, this particular date you give me, the Eid season is coming, the Diwali season is coming, the Christmas season is coming, year end is coming. I will need to ship. So you can ship, you can decide this with the seller. There are no risks because you've got the money in advance. But for the exporter perspective, this is okay. Now this is actually not exporter. There's a correction here. This is the importer. This is the importer's perspective. This is from the Almaya supermarkets. This is the importer's perspective. What the advantages that the importer will get? They will get, because they are paying everything, they are not using any of the bank facilities, they are using their own money. So that's why bank fees, which is the way that small slight transfer fee to transfer from a bank to another institution, that will be very low. Possible discount because I am giving cash in advance. Almaya Supermarket is giving me 1 million for upfront. So, usually when you buy in bulk, you get a discount. So possible, I will give him discount. Okay, fine, you're paying everything in advance. You're paying a bulk payment. Okay, fine, I'll give you 5% discount. But the risks for the importer, Almaya Supermarket sitting in India, sitting in UAE are high. Why? Because I have the money now. KC Limited in India. I may not even ship. So delivery risk, exporter may refuse or unable to ship. If I don't ship, what can he do? Right? So that way. Goods received may not be as ordered. I shipped the goods, but then he discovered that I ordered 5 tons of rice. They are lower. They are not 5 tons. They are 4.95 tons. Or they are not the quantity. They are not packaged that way. Or during the voyage, they have become stale. Something like that. No control over the timing of the shipment. Now, for example, even if Almaya Supermarket tells me, fine, the Eid season is coming on after 2 months. You supply after 2 months, but fine, I have the money in advance. Or that there could be shipment delays. Or there could be too much congestion on the port because of the so many ships coming because of the Eid rush. Ships coming, a lot of people are ordering. Every business is ordering stuff. Or there could be the fact that there is no timing per se he has, and loss of use of funds. Now, since he has given me given his cash in advance, he has no till such time that he gets his rice, Almaya Supermarket, and sells them and get the money. They'll be without money, or they have to arrange financing or to use their own fund. The fund, they have already given everything to me. Okay. Now proceeding further, cash in advance, the bank's perspective. What's it for the bank? What does the bank do? So banks, as it says, menial involvement. It's nothing. It was Almaya Supermarket's money, which they transferred it to KC Limited's bank account in State Bank of India. So it's menial involvement, except that they just transferred the funds. And where they can make, they transferred the funds. So absolutely they can charge a little fee. Okay, fine. A normal charge is 200 dirham per transfer for such big amounts. So we will transfer foreign exchange, for example. Almaya Supermarket pays 1 million dirhams and they have to supply INR to me. So for some slight exchange rate gain, the bank could make, because banks, they don't a million dirham, they will have their internal own treasury will quote them. Okay, fine, this is the buying and the selling rate, and they will probably make some spread. And cash management. Yes, they will get like it could also happen like Almaya Supermarket give the money on 7th of May today, and they say on 10th of May you give to my buyer KC Limited India. So for 3 days, the extra money would be there with the bank, for which they can use for their float, or you can use for their own transactions. So the cash manager also can help. Now we come to the second part, the fourth part is open account. And open account, as I told you, is the opposite of cash in advance. In open account, what happens is that the goods are shipped first by the exporter, by the seller, which is KC Limited in India. I supply the rice first, and then payment will come later. Now I will take you through the steps. Now this is KC Limited in India. This is buyer is Almaya Supermarket in UAE. I placed the order 5 million tons of 5 tons of basmati rice. Immediately in number two, you see, seller shifts the goods, sends invoice. I just send. I am the seller. I just send these goods. Number two, send the goods to them, sends the goods to them, and sends the goods to them, and to the buyer. Now, what happens is that usually in open account, what happens? Sends payment. Now, this payment is, I said, this is between the buyer and the seller. And usually in open account and cash in advance, usually are for buyer and sellers who actually know each other very well, or they're in close proximity to each other, or there are some related companies. Because the business world, no one's going to supply that much money and that much good without knowing or just unknown parties. So you can say they are trusted parties, and he gives them a check. Almaya Supermarket gives me a check. And as I said, this scenario is mostly for, for example, like I am KC Limited in India, but I have a representative office in UAE. Let's say it's King's Limited, King's LLC in India. I have a representative office. So Almaya pays my representative office, you can say, in check. They pay me $1 million in check. The number three, send payment will be check. Then I deposit the check in my bank, which is, you can say, ENBD. It's a check is drawn on NBF. It's an NBF check which has given me. So ENBD while clearing, I send the check to NBF for clearing. Once the check is cleared, they debit the account and they give me the payment. It's like that. So as I said, okay, there are some. It's not open account and cash in advance are very common. They are only for very well-known parties who have been dealing for years and years, or their geography close, or people have their agents here to collect payments like that. Okay, now let's look at benefits. Okay, open account exporter. Exporter is a person like KC Limited in India who's supplying rice. Advantage is nothing for me. I've given my goods away. I have no control over the goods. In fact, it's all risks for me.
So excuse me, Mr. Khurram. Excuse me. I'm sorry to disturb. Can you show the previous slide once again, please?
Yeah.
Yes, sir.
Tell me. Any questions? I will share the presentation with you.
Mr. Khurram, she wants the previous screen. So can you please back?
No, this is okay. This is okay, sir. Thank you. I just wanted to have a look at that screen once again.
No.
Okay.
Let me know if any questions. Let me know.
No, because you're saying they're depositing the check. The check is in another country, right?
No. See, that I did clarify. Now, you see, try to understand, open account and cash in advance, they are not something that you see every day. It's only because it's, you have okay. Now tell me one thing. Would you just, consider yourself as a seller? Okay. Would you just sell 5 million tons of rice to somebody in another country just without any payment, right? So there has to be a certain level of trust. There has to be a certain level of commitment, and usually in open accounts, like for example, I will not just sell. I am sitting in India. I will not just send rice to Almaya Supermarket over here without. I may, in most cases, now I do have a representative office here. Like I did tell you, okay, like KC Limited is in India selling rice, but I have a representative office in UAE. You can call it King LLC. I tell King LLC, you are my agent. What do? You collect money from Almaya. I've already given him the goods. So you can say this is the seller. He will give you a check. His bank, Almaya Supermarket's account is an NBF. They give me a check of $1 million dirhams to my agent here, whose name is, you can say, King LLC. King LLC bank is ENBD. He deposits a check in ENBD, and it's an NBF check for clearing the check. It goes to NBF. The check gets cleared. That is, they debit the account, and then I receive my payment.
Okay.
Tell me.
Okay, sir. Thank you.
These are the nitty-gritties. Okay. And okay, now talking about the advantage exporter, I'm this, and please, anybody who has questions, feel free to just say excuse me or hello sir, and then I'll answer. It's good to clarify. If it's getting clarified later, I'll tell you. But I want to make it interactive. Okay. Open account exporter. I've already given in my goods. KC Limited has already given the rice, so there's no advantage for me. Disadvantage are loss of control over goods and payment timings. I've given in the goods. It could be the fact that Almaya may not even pay me, or they pay me at their own sweet time. No guarantee of payment. Cross-border risk, because they are sitting in another country. I could have an agent, I could not have an agent. Right? Most cases they do, but what if I don't? What control will I have? There's a cross-border risk as well. And then foreign exchange risk, interest rate risk. Okay, now what happens is that now I have got, I am in India, I've got INR. Now INR, but he will pay, Almaya will pay me in dollars. Now, what if INR depreciates? I will lose because I had given him when INR was 80, now INR is 100. So foreign exchange risk, interest rate risk. Now, we are in a rising interest rate environment. Now, in a situation where we are in a situation where the interest rate currently in India are 10%. Now, had he paid me in time, I would have deposited the money at 10%, but he pays me later after 2 months, and the rates, you can say, have declined from 10 to 8%. Now I am getting an interest rate loss because that money will earn only less, right? Or to understand the interest rate risk, there are two ways. One is the interest which I will earn from the deposit. The other is the interest I'll pay to the bank. Now, what if I had borrowed money, KC LLC, KC Limited in India had borrowed money, you can say 10 lakh INR from State Bank of India to purchase. Now, during the time that the buyer, my Almaya Supermarket does not pay me, the interest rate increased. My borrowing cost was 4% and increased to 5%, 6%. But I have not received the payment, the delay in payment, and I got the interest rate cost. Okay. Now, open account importer. Importer is Almaya Supermarket. Who's the buyer? Advantage. All the advantages are for him. He has open account. Open account, the importer advantage. Now he has got the goods, and he can dictate when he wants to pay, right? Like usually, as I said, this may not happen with every other customer. It could happen with very well-known names like Carrefour, like Lulu, like people who have credibility, who I know they are not going to run away. So accordingly, they say has no control. Now he has got the goods. Carrefour has got the goods. Almaya has got the rice, and they can control when they want to pay. They are big name. They have got the goods now. Payment convenient and much less expensive than other method because they have already got the goods. There's menial bank involvement. So it's not expensive. They don't have to pay any bank commission, bank charges, bank fees, and risk is the foreign exchange risk. Now, this situation is the reverse of what I told earlier. Like, for example, I'm KC Limited in India. I buy in INR when INR was 80 to 100, 80 rupees to 1 USD. In Almaya Supermarket, let's say their only risk would be what if the dollar depreciates. Like, for example, the first like 3.67 buys $1. What if dollar is depreciated and now 5 dirham buys $1? In that case, that could be the risk. So as I said, may not be applicable in UAE's case. It could be applicable more in the East, African countries where there's a lot of variation and there's a lot of the exchange rate controls. The exchange rates are subject to a great market forces. So yes, this could be one risk. Wherein in case my currency, the currency which I am dealing with depreciates against the dollar, then importer would be at a loss. Okay, now bank. Now what bank? Again, between the two, menial involvement. There is nothing. You just order, give a check, order, online payment, bank is menial. But how can the bank make money? Similar to what we studied earlier, fund transfer. When they transfer the money, they can earn some very small fee. Okay, fine, we'll give you this service for, like you can say 1% or 0.1%. Fees are very menial, not like LC, not like documentary correction. Foreign exchange, as I said, in case the currencies are not pegged to each other, bank would make money with the difference in the volatility. And cash management, as I said, like in case they have banks have money for a few more days or even for a few more hours, banks earn money, even if they can buy T-bills or invest in government securities for the 2 days, 1 day, overnight repos. There are various ways bank can earn money. Okay. Now we come to the secondary part, which is the import collection. This is one of the other third ways, but to make it clear, I will just jump 2 slides and I'll come to a diagram, because with the help of diagram, I can explain it better. And you will also understand better. Now you can see the diagram, but I will tell you exactly what this diagram is saying. So as you see the diagram, just listen to what I'm saying. Okay. Now in documentary collection, what happens? I am KC Limited. I am in India. I have to supply 5 tons of rice, basmati rice, to Almaya Supermarket in UAE. So I am the seller in India. Buyer is Almaya Supermarket in UAE. First, Almaya will place an order, a formal order. KC Limited, I want 5 tons of basmati rice. So what I will do, I will prepare the order, arrange for the supplies, pack them, and then I put the ships. I put my ships on. I put my goods on the ship. Now, and then it goes to the customs. First thing, as I ship the goods, there is number 3 is the documents. Now, when I'm shipping the goods, like you may have sent goods to India, Pakistan, or to your countries from here. You always, the cargo that you are doing, always give you a slip of paper. They say, okay, fine, household items, 3 boxes, 1 fridge, 1 TV, this much, this much, this much. So this is when KC Limited puts my rice, 5 tons of rice on ship, I will also get something like that, which from the ship or from the cargo or from the freight forwarder. This is called the bill of lading. So my document would be the invoice. Like, for example, I will say, okay, fine, this is the invoice of which I have for Almaya supermarket, 5 million tons of rice worth $1 million dirhams. Invoice, my you can say BL, bill of lading, and you can insurance documents or some ship documents. These are the documents which I will hand over to my bank, which will be called the remitting bank, and is the State Bank of India. So seller, I am the seller, KC Limited. My bank in my country, State Bank of India, is called the remitting bank. Now, purpose of a remitting bank in a documentary collection is that of post office. Like I just, I am using the way of documentary collection. So I will use my bank. Okay, fine. I will say, okay, this is my document. I will remitting bank State of India. Please share those, and I give the instructions. Okay, send these documents to NBF Bank in UAE, which is the collecting bank. Because it's collecting the documents called the collecting bank, it's also the exporters, it's also the importers bank. So just to clarify the nomenclatures, I am KC Limited, I am the exporter, I am in India, my bank is State Bank of Pakistan, State Bank of India, which is the remitting bank, and that is called the remitting bank, right? Importers bank, which is in UAE, NBF, collecting bank, that's called the collecting bank, because it will eventually collect the documents. Okay. In documentary collection, now I've given the BL, the invoice, the insurance to a remitting bank. Remitting bank sends the documents to NBF, collecting bank. NBF, when they get the documents, what they say, see, 5 is payment here and payment there as well. They will inform Almaya Supermarket. They will tell them, see, we have got these documents. They are endorsed. They are endorsed to you, and these are for $1 million dirhams. So you pay me, right? And then you can take the documents from us, right? So what Almaya will do? They will go to their bank NBF. They will pay them, or usually they have their accounts, money in their accounts, or they arrange financing. If they're bank financing, they can use them, and they will get the documents from number 6. Documents goes to them. These documents are then taken docs. They will take them to the customs. They will show them, okay, fine, these are the documents. But Almaya has to pay the bank first and then release the documents. Now you see, this is, I am stating in an extremely simple manner what could be a very structured trade as well. Like, for example, collecting bank, it's not always possible that Almaya would have the money. So Almaya will say, okay, fine, yeah, we use our facilities, or you arrange financing for us. Right, the documents could be, there are 2 types of document. One is DP, which is document against payment, where you have to pay immediately, and one is DA, which is document against acceptance. Bank supplier will say they could have an arrangement between KC Limited. KC will say, okay, fine, I'm sending the document, but no need to hurry. I'm giving you, I am not the bank. I am giving you a credit period of 30 days. So they say, okay, 30 days in collecting bank. Okay, you can pay us in 30 days as well. As I know, there is a lot of variation. This is a very simple way I'm putting it, but there could be a lot of variation. It's called document against acceptance, where we give them 30 days. So they will get the documents, they will take them to the port. Usually there is a voyage time is different. Documents may come like in 7 days, voyage may take around 30 days. And then, while putting the goods on ship, it's not that easy. Usually, KC Limited is a very small exporter. 5 tons of rice is, I think, may not even be hardly 1 container. So ship will leave usually when the ship is full. You may have seen the images of ship with containers like containers, like loads of containers on top of them. So thing is, ship has to fill up first. Usually these are arranged by freight forwarders. Like freight forwarders has these, voyage journeys. When is the ship leaving? Like, you have these bus routes. So similarly, if you go to a freight forwarders, they will also tell you the route of ships, when are they leaving, which is fill, when will they leave. So all these are taken into factors when you're putting in when you're shipping the goods. If this ship is leaving early, when will it arrive in India, when will it arrive in UAE. So all these, like you have the bus routes on bus stands, or you have the metro station route. So you also have a voyage route as well. So all these are factored into account, and then eventually when they get customs, they can release the goods. If the goods have arrived, then they release the good. Usually banks keep the documents up to like 7 days, and then they said, please take the document. Now, depending on if it's a DA document or a DP document, DA documents are an acceptance, wherein supplier KC Limited will give Almaya Supermarket some credit. DP is then you pay immediately and then you get the document. So they will get the documents and they take it to the port, or they will wait to keep the documents with themselves when they get the notification that the ship has arrived, and they will get the goods from the customs. Okay.
Excuse me, sir.
I will take you back to the slide which I have left. Import.
Excuse me, sir.
Hello.
Hi, sir.
Hi. Tell me.
I have one question on the previous slide.
Yeah, sure. Okay.
Sir, seller is sending the documents through the remitting bank as well as the collecting bank to the buyer.
Yeah.
Instead of that, why could not they won't send it directly to the buyer?
No, see, the thing is, if you send it directly, then it becomes open. Then it will be like open credit, or it will become this cash in advance, right? If I ship the goods and then I send the document, that will become this open account, right? See, open account is when I have shipped the goods. Listen. Let me clarify. It's a good question. Now, listen to the answer. See, over here, what is the seller getting? I'm getting my payment as soon as either he pays me or he gets a time of 30 days, which is monitored by the collecting bank. Collecting bank is going to say, okay, fine, your time has come, please pay. Like collecting bank and remitting bank, they serve as the monitors. Are you with me?
Yes,
if I say directly, then it becomes open. That becomes like open account, right? Then bank is only just to give and take cash. No, documents flow through the banks in a documentary collection mode of financing. Otherwise, it becomes either open credit or cash in advance. Are you with me?
Yes, sir.
Like in that case, the banks are not involved, right? Banks only have a just related to the earlier discussion. Are you with me?
Yes, sir. Got it, sir. Thank you.
Got it now? Okay, fine. That's your satisfaction is more important. Now, import collection. Now, let's see the definition. Now, I have given you some idea. Now, let's see what the. By the way, there is these, what I'm saying, importing bank, remitting bank, seller, importer, all these trade terms, because trade is a worldwide phenomena. It takes place in every part of the world. There is a particular document called UCP 500. You can search it on the net. UCP, it's called Uniform Code of Practice something. All the trade in the world is governed by those UCP rules. Right? These are like international rules because trade is an international phenomena. Right? You can search it. UCP 500, I think UCP 502, it will come. You can the PDF available on the Google. Okay, import collection. Let's see the definition. A collection method in which goods are shipped to the buyer. Buyer means Almaya Supermarket, and the bank retains custody of the title documents and delivers them to the buyer when the buyer pays for the good or commits to pay. Pays to the good, that's DP, documents against payment, or commits to pay DA, document acceptance. Now it should be clear. It's payment method is to flow. Otherwise, it becomes classified somewhere else. Role of the importer bank. Role of the importer bank would be. This is the NBF, which is Almaya Supermarkets Bank. What he will do, he'll notify the importer. He will say, Almaya, see, your documents have come. Usually, Almaya will have an account with NBF, and most likely Almaya will have some facilities as well. Some overdraft facilities, some cash facilities. Okay. Now, obtain payment, document against payment, or promise to pay in future, document against acceptance from the importer. Like, I am KC Limited. I know Almaya is a good name. So I say, okay, fine, you take 30 days. I'll give you some time to sell your goods and then you collect the money. No objection of importer's bank to pay the exporter. Okay. Now, thing is, okay, I'd like to go to the diagram again to explain this. See, collecting bank is under no obligation here to pay remitting bank. This happens in under LC. In this case, when the collecting bank will get money from Almaya Supermarket, either immediately or after 30 days, then they will pay them. Right? So this is no obligation of the importer bank to pay exporter, execute payment to the exporter. Like what they will do, execute payment when they get the money from the importer, they will export to the exporter. They'll get the importer from the money from the importer, they'll get to the exporter. Benefits. Now, what are the benefits? Okay. Now, since over here, unlike in an LC transaction, you can say or bank guarantees your payment. Over here, bank is not putting any guarantee, so it's low cost alternative to letter of credit. It's cheaper than letter of credit, but more expensive than your open account and cash in advance. Can reject document or refuse to pay. Okay. Now, it could happen that Almaya went to the bank, they saw the documents, and then they see, yeah, I had applied for 5 tons of rice, but as per the documents I'm counting, it's not 5, it's come to 4.9 or 4.8. Try to understand this 0.1 and 0.2 in a business world matters the most, right? Or I ordered basmati rice, they gave me Kashmiri rice, they gave me some other rice. So this is not what I ordered, so I'm not going to pay. So take the document back, send it back. Like this, they can say we will not go to pay. Usually it's usually this is you know, in a banking transaction, this is what we call discrepant documents. When we do the LC, the LC is discrepant, and okay, in this case he will refuse the documents, and then collecting bank can either send it back or they can directly see what they want to negotiate among themselves. Okay, so this slide we have covered. Okay, now coming to the advantages. Now exporter. Now I am KC Limited. I have exported the good. What benefit do I have when, from my perspective? First of all, good shipped when convenient, because I have got the order. I am KC Limited. I am the seller, and I have they usually there may not be exact date by 5th of May you supply. So I am Almaya Supermarket. I say, okay, fine, the Eid season is coming. Let me put up my stocks. How much stocks do I have? Oh, yeah, I have 3 tons. I need additional 5 tons. So let me tell my supplier, KC Limited India, okay, before Eid or by 27, 28, you know, there is always a leak or a lag time. So good shipped when convenient. Title document are controlled through the banking system. That's as the person was asking the question, okay, why not we send the title down directly? So here we are not telling them directly, they're controlled by the banking system. I send through the bank, it goes through the bank, the collecting bank, they collect my Almaya Supermarket, pay my money. Less expensive letter of credit. I said now because in letter of credit, banks actually endorses the documents. So hence, that is why there's a control which the banks have kept. So this is less expensive than letter of credit, but more expensive than open account and cash in advance, because bank is involved at a higher level risk. No guarantee of payment after shipment. Okay, now I have shipped, I have sent the documents goes to NBF bank, but NBF no guarantee of payment after shipment. Now, what if Almaya Supermarket defaults? Almaya Supermarket defaults. Forget about my payment, they can't pay anything. So no guarantee of payment after shipment. Non-acceptance by the importer, as we discussed earlier. Okay, what if Almaya says, and then they are very picky customers, and they say, no, this is not what we ordered. Though there's a order in the beginning. If you see this diagram, order, it's a written order that comes exactly saying what is it, what quantity we want. But for some reason, they find some issue somewhere. It's not packaged the way we want. Where is the warranty? Or we wanted insurance from this company, you get from that company, this and that. Where is it? Importer. I think we were here. Okay. Non-acceptance by the importer. Time limit for holding goods in storage. Okay. Now, thing is, what if the goods come? He has got the documents. Now the exporter, I am the seller. The first non-acceptance of the importer, Almaya refused to pay. Time limit for holding the goods in storage. Okay. Now over here, what happens is that when the goods come in the port and the documents also come, the warehouse as per UCP gives some warehousing or storage facilities. Now, importer has to release them before a certain time because, usually in case of edible products like rice, like even rice, I think it's fine. But, it's like vegetables or, some perishable products. Now, it could happen, there's a certain time after which they may lose their freshness or they lose their saleability. So now the importer, exporter, me, KC Limited has sent the goods. They are there with they are there on the port. The port UAE port can only give facility up to 7 days or 10 days, and the documents have reached. Usually, the documents reach before much before the thing. They are there with Al Masuk market, but Al Masuk market they are delaying, or their operations guys on leave, or the operation guy has not communicated to the senior management. Okay, the port has come, or they have got too many. They are getting rice from KC Limited. They are getting fruits from some other place. They are getting medicines from some other place. There are so many things happening because of an operational hazard at their end, or some delay, or there's a person who is not diligent enough, and he has refused. He forgot to check on what are the documents that have come from KC Limited. So there's a time holding as well, and may incur storage, and because of this may incur demurrage cost or storage cost. The goods have arrived. If you don't release them before a certain time, they'll give you a free, I think 7 to 10 days, the port give you some storage, and after that they start charging. So that's why it gets charged. So then the importer can say, exporter, you pay, why should I pay? Or this, they can negotiate, but it will be cost to both of them. Now, importer's perspective. First of all, as we discussed, he can reject the document in case we are not as per structure. He can reject or may refuse to pay or accept the draft. He may just say he did not order basmati rice, he ordered Kashmiri rice. He did not order 5 tons, he ordered, or 6 tons came. He said, okay, this is extra 1 ton. I don't need that 1 ton, right? Or less expensive letter of credit, as this point you have already discussed. What are his risks? The goods not being as described in the documents. Now, see, try to understand, in practical life, what we are saying is in a very theoretical way. He sees, he does not accept and says, go away. But, this can't be possible because, Eid season is coming, or some Dubai shopping festival is coming, or global village has started. They need the goods, they need to stock their inventory. So he can't take a risk. Okay, after 2 months the shipment arrives, now please go back, take it back. I don't want it back. Usually this doesn't happen. They usually negotiate on the price, negotiate on the next shipment, negotiate how are they going to do it. So fine, he has got 5 tons, he got 6 tons of rice. He doesn't have the storage capacity, but he still take the thing and he says, let me sell it. Instead of me without business, let me be with business. I ordered basmati rice does not come. Some Kashmiri rice came, so let me just sell that. At least have rice. An exporter may fail to ship. Okay, what if he has placed the order, but exporter KC Limited, because I had ordered from many other important players like Lulu, like Spinneys, like so many other players. So I said, Almaya, oh, come on, yeah, it's just a small shop, Bakala. It's not important. So I put the order on the last, or give it the last shipment. Or right now the freight charges are very high. So I said, okay, fine, it's the Eid season. I'm getting very high freight charges. Let the Eid go, then I'll apply after the Eid. No, so what? Yeah, they will 2 days later they will get it. No, so what? Right? It's not fail to ship, or they ship late, or like that, just to save my card. Okay. Now from the bank's perspective, so we look at the three methods from 3 sides: importer, exporter, and the bank. In all cases, bank income opportunities. Okay, if you remember the flow chart, it goes through the bank. So bank is now involved far more than in cash in advance or in cash in advance or an open account. Bank is involved more. As a result, bank fee income, bank is not, there's no free service in the world. Bank is going to charge you. They're going to charge you for the document, for the service that they offer, right? And more than cash in advance in this. Payment transactions. Now, even not just the money, even the document flow, payment also flows through the bank. The Almaya has to arrange, Almaya has to arrange funds for 2 NBF to pay State Bank of India, to pay KC Limited. So payment and foreign exchange, if there's a difference in transaction and money, if there's a difference in currency, then they will make money from the difference in exchange rate. Risk to a bank, not following collection instructions. What if Almaya supermarket had told the bank that like Almaya supermarket had told the bank that collection document should have a bill of lading, should have an invoice, and should have the insurance. Like, for example, usually in terms of perishable items, they have some certificate called PICO, perishable insurance, something which ensures when were they were taken from the farm. It has the origination document. Like for example, these days even the meat that comes from Australia, there's a barcode. The meat is actually barcoded, and from there you can know when was it cut, when was it put to the how fresh is it, you get to know. So what if the Almaya Supermarket had told its bank, NBF, please check for this insurance. If the insurance is not from this particular insurance company, then don't take it. And what if the insurance from Oman Insurance, it came from some other insurance company, and the bank did not follow it, right? So Almaya could say, tell the bank, see, I instructed you to have the insurance from this company, not from this company. Now I'm not accepting it. Second is not complying with US and foreign government regulations. Now this is sanctions is highly critical for a bank, particularly in a trade transaction. Sanctions from where the goods are originating, the type of goods, the vessel, the flag of the vessel. Like for example, in a certain time in the past, UAE, we did not have a trade with the vessels of certain countries. Because so these were you have to comply with the sanctions. So are they complying and not safeguarding negotiable documents? Okay, now this refers to physical damage. Now these documents are physically held. Physically we get these documents, like a courier document you get, DHL document that you get. Now what if usually in our bank we keep them in a fire resistant locker which is operated by two people. Like one person can't open it. There are different passwords and different ways to open by two different people. Now this refers to the fact that what if the documents come, the clerical staff just throws it somewhere, and then you discover the document actually damaged, or people, this has happened in the past, when they are having tea and the tea gets dropped on the documents. So this can render the document not worthy. When you say the document is not worthy, like you have a banknote, the banknote get torn, or you drop tea or ink on it. So it's not bank worthy. So that's why the document get not bank worthy. So that way, the physical operation. Now we go to this is again a very important part, import letter of credit. But in order to explain it and explain it better, so any questions so far, let me know. I will jump to the diagram. Now there are three stages of it. There are three diagrams for it, right? There are three. No, in fact, there are four. 1, 2, 3, and 4. I will tell you. I'll first take you to the document, and then I will take you to the literature because you understand better. Any questions so far? Let me know. Okay, I assume everything is understood. Okay, now in letter of credit, what happens? Now, please understand the nomenclature. Now you will learn a few new names. Okay, in letter of credit, what happens? Almaya Supermarket in UAE wants to order 5 tons of rice from KC Limited in India. They don't know each other, or the trust level is not yet built up, or for whatever reason, KC Limited said, Almaya, I will supply you this goods based on a import letter of credit. So what will Almaya Supermarket do now? Please listen. Almaya Supermarket will go to its bank, which is NBF in UAE. They will say, okay, we want to open a LC favoring KC Limited in India for import of 5 tons of basmati rice. The bank, which in this case will be called the issuing bank, because they will issue the LC. They will give a LC application to Almaya Supermarket to fill. Like you go to account, you have account opening form to fill. You have a telegraphic transfer, you have application to fill. So similarly, the LC application to fill. When they fill the LC application, so please follow this carefully. The importer, which is the Almaya Supermarket, becomes the applicant of the LC. NBF is the issuing bank because they will issue the LC, and the beneficiary will be KC Limited in India. So now there are 3 more words that you have to know now. One is the importer, Almaya Supermarket, is now become applicant of the LC. Issuing bank, NBF has become the issuing bank because they'll issue the LC, and KC Limited becomes the beneficiary of the LC. So this word of applicant, beneficiary, and issuing bank is important. And KC's bank, which is State Bank of India in India, has become the advising bank because the issuing, bank can't approach KC directly. Bank do not know KC. There are so many cases around. So bank can only talk to a bank. So NBF can talk to State Bank of India. Usually, these banks have lines on each other. Banks have lines on each other. So State Bank of India. So State Bank of India becomes advising bank because State Bank of India, once they get the LC from NBF and UAE, they will advise KC or LCS come. Okay. So now let's go back. Now Almaya goes to NBF, the issuing bank, says that we want a LC. They fill up the LC application. And once the LC application is filled up, the issuing bank, which is the NBF, they will do a credit check. Credit check would be, fine, if they are favoring KC Limited, is KC Limited fine? Are the goods fine? Are they as per the laws? Because in this case, the issuing bank takes the credit risk. In this case, the issuing bank takes the credit risk. Yes, we will pay. Like that is what the difference between LC and documentary letter of credit. In documentary letter of credit, it's just a post office. The remitting bank, just the collecting bank, that is NBF in this case, just takes the documents and take the custody and then say, Almaya, you either pay me or you take a credit from KC. But in this case, the issuing bank will actually pay. Okay. What happens is that usually Almaya Supermarket will have a LC facility with this bank, with NBF. Without that facility, they will not be able to do it. So LC facility or overdraft facility or some form of facility is already offered. Okay. So now what happens? Okay, if you see, now they have got the LC application. Issuing bank has done the credit check. So now they issue the LC to the advising bank. Basically, when they say issue the LC, usually banks talk to each other. They don't pick up the phone and talk to each other. There's a way called SWIFT. SWIFT. It stands for like SWIFT. It's an acronym for a word wherein this is how the way banks talk to each other. They send SWIFT messages. Send the SWIFT message as an LC to the advising bank. Advising bank is LC bank, LC State Bank of India. State Bank of India has my account. They have my contact detail. They inform that the LC has come. Okay. Now what happens? That the next diagram will show. In this, once I get the LC, in the LC, usually LC will tell me this basmati rice for this much tons, for this much quantity, at this much date, you have to ship to Almaya Supermarket. So what I do, I prepare all that. And number 6, we were at 5 here. Inform. Number 6 is, okay, I ship the goods. And I give the document. Document is again the BL, the insurance, the invoice, right? And the LC draft, which I got, I give it back to my advising bank. Now, when I give to the advising bank, there is a way I can even get payment from them, right? Because if I have got my lines with my advising bank, like, these lines, these facilities are called bill negotiation or bill purchase. There are 2 items. But again, I said, I don't want to make it complicated at this stage. There is a way I can get payment from my bank based on my documents because LC is a confirmed letter that issuing bank will pay. So NBF knows that I will get the payment. My bank, State Bank, knows that I will get the payment from NBF. So I can even pay KC Limited. So they can pay, and that is called that is they have got my bills negotiated or purchased. Negotiation bills under USENS LC or under okay. Now you see there are again similar to the documentary letter of credit. Either the LC could be retired at once. The Almaya, as soon as they get the goods, as soon as they get the documents from the thing, they can pay. That's called the site LC, or they can, the bank, not KC Limited, the bank can give them a credit of 30 days, 60 days, 90 days. You pay us later, provided they have facilities. That's called the USENS LC. Now, if it's depending on the type of LC that has been issued, I can either negotiate or purchase. But I said, this is something for you to keep in mind. But for the purpose of this presentation, let's make it simple. So payment either I can get from here as well. Okay, then what happens later? Now, advising bank, which is my bank, State Bank of India, they say, okay, fine, they have got the documents, we have got everything. Now they send the documents to the issuing bank. Issuing bank is NBF. So now what will NBF do? NBF will see the documents. The documents will have my invoice, they will have the bill of lading. Bill of lading will tell me what goods have I given, what quantity they are, what quality they are, when did I give it, and all this. So they will check. This is called checking. Is it as per the initial application? And if there's a difference, that's called the discrepant LC. So other word for you to keep in mind is the discrepant LC. That is, it is the LC which the invoice which I have given, the seller has given, and the initial application do not match in terms of quantity, quality, whatever. So they advise, they tell Almaya, see, I've got this LC document, but there's a discrepancy. So should we accept it? Are you fine? In most cases, it's fine. Usually they accept it because if they say not, you can't. It's not like a grocery shopping. You buy a grocery and then you return it. Usually these are either done properly or if there's some discrepancy, usually accept it. So issuing bank NBF will say, okay, bhai, fine, we have got okay, fine. Number 9 is payment. Okay. So advising bank will give the document draft and they will get the payment from the issuing bank. The NBF will pay them. And because as an NBF, when Almaya came, signed the LC application, now they've got LC lines with issuing bank. So now the risk lies with the issuing bank. So they pay them, they get the document draft. These document draft payment. So now issuing bank, when they've got the LC, everything, they say, oh, fine, there's discrepancy, you accept it. Okay, fine, they say accept it. They tell Almaya what to do. So Almaya, see, it says number 11 says payment to accepted document. Either will pay immediately in case of site LC or they will accept it. Okay, when I accept the document, I'll pay you after 30 days, 60 days, depending on the arrangement they have with the issuing bank, not with Mr. Casey or Casey Limited. And issuing bank release the document to Almaya support. What will Almaya do with the document? As a usually to go to customer and release the goods. So as I said, to the new nomenclatures which you have learned over here are applicant is Almaya Supermarket, which came and applied for the LC. It became the applicant. Beneficiary was Casey Limited because it was the person who will get paid. Issuing bank was NBF because they issued the LC. Advising bank was State Bank of India because they were the one who told Casey, who received the LC and that the LC has come. But this is a very simple structure. There is also something called a confirming bank. What if NBF says, what is the State Bank of India? I don't know it. Or no, sorry, the other way around. State Bank of India says, what is NBF? I don't know NBF. Please, can you get this LC confirmed from a large Bank of India? So NBF goes to probably a bigger bank in India, JP Morgan or some City Bank, and they say, okay, fine, please confirm the LC for us. So they confirm the LC and then they advise. So there are other ways, other things as well. So advising bank, and I did tell you advising bank, what if Casey Limited has lines with advising bank? They say, I want the money now, you can get from NBF. So please negotiate the document for me and give me, like for example, the documents are for million dirhams. You negotiate documents and give me 90, and then you can earn the 10 on your own. So that way, then the advising bank, also called the negotiating bank, it also has negotiated documents for them. So I said, I don't want to make it complicated, but just giving you a flavor for the next for a intermediate course. Import letter of credit. Let's see the definition now. Any questions so far? No. Okay. Import letter of credit. Definition. Bank substitution of its credit worthiness for that of a buyer to facilitate a commercial trade transactions. Let's read it again. Bank's substitution of its credit worthiness. NBF has endorsed, NBF has stamped, and NBF has signed for that of the buyer, Almaya Supermarket, that we are taking risk on Almaya, that we will facilitate a commercial transaction, we'll buy rights. Process is straight through submission of applicant documents to TSU branch for issuance of import letter of credit. So it's nothing, the process we have explained, so the trade service unit or something. Okay. Now let's see letter of credit or document issued by a bank guaranteeing payment, providing certain conditions are met. So bank issued by a bank, which is NBF, guaranteeing payment. NBF will pay, not the buyer, NBF will pay. Even if, let's say, Almaya defaults, NBF will have to pay because they have given the endorsement and their letter on this. Okay. Now let's see parties to a thing. Applicant, you know who the applicant is. It is Almaya. Beneficiary, Casey Limited. Issuing bank, NBF. Advising bank is State Bank of India. Paying bank is the bank who pays. It could be the same bank as issuing bank. Issuing bank pays. Negotiating bank. For now you said same as advising bank. Confirming bank. See, confirming bank usually are needed when the banks, like, banks also are rated. Every bank has a rating by, the Moody's, Fitch, they rate them. In certain cases, banks are not rated. So in case a bank is not rated, some bank in Africa or some other state, you may not know the bank, or the bank will say, we can't take a risk on this bank. So they have some other bank, more credible bank, confirming that thing. And reimbursing bank. Again, I said, these bank, confirming bank may not be required. Reimbursing bank and paying bank may be the same. It's like that. So only in case the banks don't know each other, then they appoint their own correspondent bank to pay. Okay, now letter of credit, this thing process of 4 slides we have already done. Now, okay, now again, as we see, we always see advantage and disadvantage from exporter perspective, importer perspective, and bank's perspective. So let's start. Exporter perspective. Exporter is who? KC Limited. Yeah, please, people, any questions so far, let me know. I assume nothing. Okay, now for the exporter is KC Limited. What is my advantage? I now don't have to worry whether Almaya will pay me or not. In any case, I'll get my payment from NBF, and based on credibility of NBF, even my own bank will pay me. So elimination of importers credit risk, issuing bank assumes it. Issuing bank, again, NBF assumes it. Elimination of importer, that's the Almaya market credit risk, issuing by importer. Elimination of a country risk if confirmed. Okay. Now, what if the country risk is the risk wherein, because of any exchange rate control or any issue with the country, you are unable to get your payment? What if I supply to certain African countries? I am KC Limited in India. I'm supplying to a buyer in Africa and Sudan, and now the war has erupted. Now what will I do? But what happens is that a certain known bank in Sudan has taken the assurity that they will pay me. So, and my own bank has got lines with a bank in Sudan, Sudanese bank, and my bank pays me as well, right? So elimination of country risk if confirmed. Now the bank, Sudanese bank has confirmed, I'll get my money. Elimination of foreign exchange risk if issued in exporter's currency. Okay, now this point, what it means. When NBF goes to, when Almaya goes to NBF, they issue the LC in dollars, right? What, and then I am, because I'm in INR and INR could depreciate, I'm at risk. As a result, what if importer, this Almaya market opens the LC, issues the LC in INR itself? If it issues the LC, I have no risk, $2. That's what it says. Payment float is minimized. Now, payment float is a concept whereby, what happens is that in case of an open account or a cash in advance, money is there. Okay, let's think of open account. Open account, I have supplied the goods to Almaya supermarket. Almaya has not yet paid me, and Almaya is counting 1 million in its cash, which is supposed to pay me. And I am KC Limited in India. I have not yet got the cash, but I am saying 1 million is my receivable. On the other hand, Almaya supermarket is showing 1 million in its cash balance. So payment float is a double counting of that thing. Almaya is showing us 1 million in its cash balance, but it's not Almaya's, it's mine. They have to pay me as soon as possible in a month's time. So in this case, in an LC transaction, when your dates are fixed by the bank, banks monitors the documents, banks tells you to pay, or there's credit, the time is fixed. Okay, 30 days, this date you have to pay, otherwise bank will charge you. So the double counting of this thing is minimized. You can't double count. Now you have to pay. It's either your money or the bank's money or the seller's money, something like that. Disadvantage, it's expensive. Banks will, there's a LC commission is high. Banks take the risk, they will charge you. Non-compliance with terms of credit. Okay. Now, if, as I said, there is a discrepant LC as well. Almaya asks for 5 tons of basmati rice of this in this particular packing, this, and I don't comply. So they could be discrepant documents. Okay. Now, letter of credit importer's perspective. This is from Almaya supermarket's view. Advantage is that importer pays after the shipment. He has shipped the goods. He has got the letters. He can see the document, whether they are complying or not, and then they pay only after the shipment, and also checking the document. Payment is made only after the exporter compliance with the terms of letter of credit. As the banks, NBF will, when they receive the documents from State Bank of India, one of the document will be the invoice, the bill of lading. They will compare them with the initial NC application. They will see, are they complying? Are they fine? Are they as per the terms and conditions agreed? If not, then they will report it to Almaya supermarket. Okay, what are the disadvantages? As I said, expensive. Bank fees are high for LC. Goods may not be as represented in the documents. Okay, in case of discrepancy, unless and until it's really off the mark, only then the Almaya will say, okay, fine, I've asked for rice and either the quantity or the quality is not up to the mark. They are rejected. Usually what happens is that in case of a discrepant LC, what happens, the Almaya will go to KC Limited. They say, come on, yeah, we ordered 5 million of basmati rice, the quality of the rice, as we saw the rice, the quality is, not up to the mark. Around 500,000 tons have become stale. So can you give us discount? So usually, okay, I'll say, okay, fine, don't pay me 1 million dirhams, pay me you can say 900,000. That's all. So I'll give you discount. It's like that. Usually they negotiate. Now bank. Now, how does the bank benefit? What is it for the bank? Now income opportunity is free. Now bank will earn from flow of documents, from payment flow from foreign exchange, similar to documentary collection. Like when the bank will handle the documents, they will charge you. They will charge you the fees, the commission. If you negotiate, they will charge you their fees. If you accept and if they provide you facilities, bank will charge. Payment transaction, when transferring money, there's a charge for transferring money to another country. And foreign exchange, obviously, this is in different countries, different currencies, then you will earn from the volatility of the currency. What are the risks? Issuing bank is NBF. NBF has issued a letter of credit. Now, credit. It could happen that Almaya defaults. Now, what can NBF do? NBF will have to pay. So, issuing bank will have a credit risk. But usually, as I said, these Almaya market will have lines with issuing bank. Like they will have facilities, they will be dealing with them for years. LC's banks only open for their trusted customers. Advising bank operational. Again, as we said earlier as well, advising bank is the state bank. And what if the documents have come, but the person was lazy, he did not keep a track of it? Operational risk. It's a human error risk that they did not tell seller, KC Limited, the goods have come, you to prepare for it. As a result, I'd lose the deal, like that. Confirming bank is the bank like credit and country resource issuing bank. Now, as I said, okay, what if I'm dealing with a NBF issues the letter to State Bank of India, but they say we don't know. State Bank of India gets the letter, and they say okay, we don't know what this NBF letter is. So please, JP Morgan in India, please confirm. Do you know? They say JP Morgan says yes, we have lines on this NBF. Let me confirm it for you. So JP Morgan in place of NBF in UAE, JP Morgan in India will take the risk. So credit and country risk of the issuing bank. Now JP Morgan has taken risk for credit. NBF could default, and nowadays we have banks defaulting as well, and country risk, because in UAE is a different country that also take risk of the country. Okay, negotiating bank, credit risk of the exporter. Okay, negotiating bank is same as the advising bank, could be the same as the advising bank. So what will do credit risk of the exporter? Now negotiating bank has paid as well. I can go. My bank is State Bank of India. State Bank of India pays me. I negotiate my documents. I give them 100 million. I say you can get 1 million from NBF, you give me 90 million, 10K you can keep as your commission. So what if this credit risk of the exporter? Now exporter in this case is KC. Now I default. Now I myself default. Now in this case, forget about the 10K, they will not get anything because I have defaulted. My buyer, Almaya will say, why should I pay? KC is already defaulted. He's defaulted, so let him go. Why should I pay? If you declare bankruptcy, then there's nobody the laws in UAE are different, but in America no one can get after you. You're declared bankruptcy. Like even over here, companies want to protect themselves. Before banks get at you, you yourself declare bankruptcy so that you can have some time with the lawyers. So in negotiating bank, in this case, this is the State Bank of India, who has paid me, KC Limited. He takes credit risk of the exporter. That's me. They have paid me. But in the meantime, if I myself default, then I'm not going to get any payment from my own buyer. So my bank has already paid me. So they will be at a loss. Okay. Now we are coming to a different concept. It's called standby letter of credit. Now, before we read the literature, by the way, any questions so far? I hope everybody's awake on their screens. Okay, so let me tell you what is the standby letter of credit. Okay, this usually happens, in open account. In open account, we told you KC Limited in India will supply rice before receiving a single rupee from Alliance of Market. I've already shipped the goods. That's open account. But what happens is that I will say that now I have no guarantee, absolutely no guarantee. When will Almaya pay me? What will they pay me? So that way. So what I will do, I'll say, okay, Almaya, don't open anything. Can you give me a standby letter of credit? Whereby they will go to NBF and they will again, similar to LC, they will apply for what is called a standby letter of credit, which is a guarantee, a financial guarantee, which the NBF will issue in my favor. Again, it will flow similar to an LC, but it's not a LC because the documents will not be handled by the bank. Document will be handled between Almaya and KC Limited. Only I will give a standby letter of credit to State Bank of India. I will say that this is beneficiary is KC Limited. Just tell him that standby letter of credit from Alliance of Market is there, and please supply the goods. That's all. Now let me read to you the literature. Provides monetary indemnification to a third party, the beneficiary, which is KC Limited, should the bank's customer, the applicant, which is Alliance of Market, fail to perform the contractual obligation. In case Almaya does not pay me, then I can call on this guarantee. That's all, nothing more. Does not require shipping documents. Documents are not handled by the bank. We will handle among ourselves, but require statement of customer's default. It is just that if I have to draw on the LC, I have to say Almaya, I will go to my bank, State Bank of India. I will say Almaya in UAE has defaulted. Please, I want to call on this LC. So please, can you write to the bank in UAE, NBF, okay, your customer has defaulted, please pay me. That's all. Often used in support of open letter of credit. Again, a very important term for you to know. And as always, we see the thing from three perspectives: customer, bank, importer, exporter. Okay, now first of all, the applicant's perspective. Applicant is who? Applicant is Almaya Supermarket. And what will Almaya, from their perspective, what is the thing? May not need to commit funds to collateralize the transactions. Usually in standby letter of credit, bank will ask for a cash security, usually, but may not need. But however, if Almaya Supermarket is known to NBF, they have lines of credit with them, they may not need to commit, they will not actually give them the cash to have that issue. Widely accepted market practice. Now, instead of going over the hassle of opening LC, then document come through the bank, you wait for the document. So instead of all that hassle, let's open a standby letter of credit. So there's a guarantee that you have, but you can supply the goods among us. Less expensive than other indemnification. Because it's banks over here they are not handling the documents. So hence it is less expensive than LC and less expensive in certain cases, as expensive documentary letter of credit. What is the risk for applicant? Beneficiary may draw prematurely or present fraudulent document. Beneficiaries who? KC Limited may draw prematurely. Now, what happens is that KC Limited is sitting in India. He has told Almaya, okay, fine. I've got your standby letter of credit. I have supplied 5 million tons of rice to you, but what I will do, I will wait for a month for payment. What I do in KC Supermarket, I am a little bit panicky. After like 20 days, I say, Almaya, pay me in 5 days that I am drawing on the thing. So I may draw prematurely before the thing or present fraudulent document, or may tell my bank, because I am there in India, he's there in UAE. I will say, oh yeah, this. I've got this Google search. Almaya has defaulted, or one of the owners involved in certain case, or no, like that. Anybody can write a blog, because this has happened in actual case as well. And I take the blog. Oh my God, he has defaulted. I think he's going to run away. This and that. So please, I want to draw on this guarantee. Please, can you write to this bank and draw on the guarantee like that? Okay. Now the next. From beneficiary perspective, KC Limited, what's the advantage? Mitigation of commercial risk. I know eventually if I don't, I'll call on the guarantee. Mitigation of country risk if confirmed. Now, as I said, UAE again is a safe country, but whatever my customer is based in Sudan. So if that SPLC has been confirmed, certain bank, the certain bank in Sudan has issued the SBLC, that SBLC, one of the banks in India has confirmed and then given it through State Bank of India to me. If it's confirmed, then I don't need to worry about what happened in Sudan. I will get paid, or I can call on the guarantee and I can get my money. Elimination of foreign exchange risk if issued in currency of beneficiary. We had a similar case earlier where we said, if I am dealing in INR, Indian rupees, I get my payment in Indian rupees, then I don't need to worry. I don't need to worry about my Indian rupees appreciating or depreciating. I'll get what I want. In case of default, ease of payment settlement. In case of default, ease of payment settlement, that is, in case Almaya defaults, I can have easy way out with my money. Okay, what are the risks? Non-compliance with the standby terms of letter of non-by term with the standby terms and conditions. Okay, I will explain to you what it means. See, it's not that, there's no free lunches in the world. It's not that easy. You have a standby letter of credit, Almaya does not pay, Casey goes and draws on the thing and then gets his money back. It's not that easy. Standby letter of credit, if you see, these your credit card applications, your mortgage loan application, they have a like 3-4 type pages in font size 8. They have a terms and condition. These terms and conditions are framed by the lawyers, and when you call on the guarantee, now they have 1 or 2, there will be something somewhere that they will say, okay, fine, you have not complied to the letter of guarantee, letter of credit, like, they could come up with as minor as, in certain cases, this has happened as well, wherein even the spelling mistakes, how you spell rice and how you spell banaspati and how you spell countries, even if the name of the spelling is different, and lawyers catch that and use that as a way to get out. See, this says the Almaya supermarket, but the name was Almaya supermarket. See, this has also happened. So the terms of condition, when it comes to legal document, now you have to be extremely careful. The trade license, the name was Almaya supermarket L.C, but in the application, it was in the standard, it was Almaya supermarket LLC without dots. So, such things, such minute details also kept put up by the lawyer, and legal documents, they are important. Now, from bank's perspective, again, from bank's perspective, what happens is that, again, you earn a fee, that's an income opportunity, but risk. Now, what are the risk? Issuing risk, credit. If NBF has issued a SBLC, he has a credit risk, because if in case Almaya defaults or does not perform, he has to pay. Again, advising bank operational, similar to what we did in LC. If this goes to NBF, State Bank of India, the person over there does not inform me, or for some reason, human error, he has too much work, or there are too many SBLCs, or I'm a customer which is not important to them, they may not even consider me that important, and then that's an operational risk. Confirming bank credit and country risk, again, similar to the one with the LC. If my bank, State Bank of India, say they don't know NBF, they want to get confirmed, JP Morgan confirms. So JP Morgan, the risk is the credit and the country risk of issuing bank. If the banks can default, let's say NBF in worst situation defaults, countries, so the issue or something happens UAE and they can't get the money back, all that. So these are the risks. Now, I think that brings us to the end of our presentation, but I have preserved, like, I'd like to take some questions from you so that it's clear on both sides.
Thank you so much, Mr. Khurram. I believe Ain was have a question before, so is it clear now, Ain, or you want to ask it?
Come again, what did you say?
One of our audience, she's already have a question before. So is it clear now, or you want to ask it? Here she was asking about when doing export business is CIF better.
Come again?
When doing export business is CIF better?
CIF, what is CIF?
Ain?
When?
Just a second, because one of our audience, she was have these questions.
Sir, you may go to the chat box and open that. Over there, she has asked a question.
Okay,
yes.
I'm opening the chat box. When doing export business is CIF better. Now, CIF, are you talking about this? No, what does the CIF stands for? Is CIF? But can you just clarify the question?
Unfortunately, she seems out of the session now. Maybe she will back and ask it again.
See, there are, if she's not here, then even my answer, See, when you are when in a LC also specifies, when does the buyer or the seller take possession of the goods. Now, okay. Now I am in India. I am KC Limited. Now I have shipped the goods on the ship. Now at that time, are the goods with the
Actually, sorry to interrupt. The question which she has raised, it is basically the term she has used, CIF, is related to logistic. And here like sir is teaching us in the terms of bank.
I'm telling you, see, if you can clarify what does she mean by CIC? Their LC specifies when the transfer of goods will become from the buyer to the seller. Is it freight on board? Is it like when KC Limited from a port in India has docked the rice on the ship? Is that the way when it becomes Almaya's custody, or when it reaches the port, his port, when it becomes his custody, or when they take eventually custody? If I'm not mistaken, the CIF refers to the when they take the possession of the good, but I need to clarify the question.
Mr. Khurram, I think this is related to logistics, cost,
Okay,
insurance,
fine.
and freight. Yeah, I don't know. I mean,
So if you can get the clarification, I can get the answer. I will try my best to answer.
yeah.
Anybody, but I do like to entertain questions in terms of anything, any clarification, anything, please. Because it can't have, or I will think it has become so clear, that no one has a question. So that way. So please feel free to ask. This is a basic level trade. Trade can get
The
as complicated as you
abbreviation
want to.
she has used is basically based on the logistic and supply chain cost, insurance, freight agreement. It is actually. So it doesn't relate to this subject or topic.
Okay. Now, anybody, any other question? Any other question? Those who are here, ask a question.
Sorry, Prof, I have a question. What type of business, what type of entry you recommend while opening an export or business? Type of entry, LLC, there is a lot of, what you recommend?
Sorry. What type of?
Entry while opening an export business.
You mean a license?
Yes.
Import and export license.
Okay, see, license, there are various, there are two type of license that are available in UAE. One is a mainland and one is a free zone, right? Now there are around 7 to 8, this is not pertinent to this presentation, but I'll tell you, there are 7 to 8 free zones in UAE. You have a Jabal Ali free zone, you have a Hamriya free zone, you have a Sharjah free zone, right? But these are the free zone one where the tax is not applicable. On the other hand, the mainland ones, which is when you have your company incorporated right inside UAE, what you call LLC, and the other one you say FZCO, mainland license is far more powerful than a free zone license. But on the other hand, mainland, you will be subjected to a corporate tax. I hope that answers your question.
Yes, definitely.
Or if you can see, my number is written. If you want, you can contact me separately, and I can help you or connect you with people.
Okay, thank you.
Sir, yeah, I have a question. Sorry, my throat is not well.
Come on.
Come
on, I can hear you.
Yeah.
Come on.
During the, when we issue the letter of credit, where is the role of International Chamber of Commerce?
Okay. What? When you issue?
Like we issue like letter of credit is the one of the safest, you can say, mode of payment to receive the good and another party receive the payment.
Okay.
So in between, where the role of the International Chamber of Commerce lies?
See, International Chamber of Commerce, I said, when I was giving the presentation, I said, all the trade transactions, international trade transactions are governed by a set of rules by International Chain of Commerce. It is called UCP, Uniform Code of Practice. It's available. You can Google it. It's like a 500-600 pages book. Right? So all these terms I'm telling you, the applicant, the beneficiary, 7 days the port will keep, after the bank will wait for 7 days for the payment to get received. And what are the duties of the ports, the between the shipping lines, these are governed by that. These are already incorporated, LC terms and condition. If you see the terms and condition of a LC document, they will have all them as part of it. Are you with me?
Yes, I am with you.
So international UCP, all the trade transaction in the world are governed by UCP rules of UCP, Uniform Code of Practice. If you want, I can share with you separately as well. I have it somewhere lying. So all the trade transactions are already governed. They're already, LC applications that are given, documentary collection applications that are given. They already have, like for example, these nowadays we have for the Central Bank of UAE has issued.
There was one of the topic, I don't remember exactly. They said that if the buyer or like importer or exporter failed to anybody is failed to receive the goods, or another party failed to receive the payment, so the bank will provide the insufficient fund like that something, and they can file a case in
See, I think you're talking about yes. I think you're talking about if the for example, I told you in the case of LC application, let me tell you that, right? Like this was the slide. In case this is the letter of credit, okay. In case LC issuing bank, NBF has issued the LC. In case if Almaya does not default or does not pay, even in any case, NBF will have to pay. They will then can take them to task. Are you with me?
Yeah, understood that. If the buyer, like Maya Supermarket, fail to pay the amount, so issuing bank will be responsible to pay the
in case of LC.
Yeah, in case of that same thing, LC will be
documentary collection, no. LC, yes.
Yeah, that's what I'm saying. In LC, in the case of LC only, the issuing bank will be responsible to pay to the seller. Later on, they issuing bank will deal with the buyer according to the rule and regulation.
Usually, as I said, Almaya can, LC bank will not open an LC for any walk-in or if anything. Usually, they need to have some form of banking history with them.
Yeah, normally they check like 6 to 10. I remember they said that.
Not remember, I know
each and everything. No
I do this.
Check,
it's
no
not
loans.
That easy. Usually, like Almaya has to deal with us for a certain time. They have to pass a very strict customer selection criteria, customer acceptance criteria. Only then we onboard it, and then right. So we even know we often ask who the owners are, who the owner parents are. Right now, these EKYC, KYCs, know your customers things are we get to know even their grandparents like that. It's not like that. It's not as any walk-in customer will come and say, please issue LC for KC Limited. So it's not that. I put it very simply. It's not that simple.
No, I know this.
Please ask questions. Because your questions help to clarify, and then that will also give me some feedback about how much have you understood. That's my thing.
Yeah.
Anybody else?
I have a question. When we shall receive this presentation?
I think you can talk to the coordinator, and she will. She has the presentation already. She can share.
Okay, thank you.
We will share the recorded video with you.
Okay, thank you. And the presentation also?
Sure.
Thank you.
Thank you so much. Anybody have any questions? Okay.
So
Shirin, do you have any questions?
Session was a thing. I'd like to have some feedback. You can give your anonymously, whether positive, whether negative. Please share your feedback with the coordinator, Ravana, and she will hand it over to me because I'd like to have feedback, whether positive, whether negative, and to improve further. And as I said, my name number is already there. If you want anybody, so I'm free. Let me know if you need further clarifications and all.
Thank you so much, Mr. Khurram.
So presentation is good. We would like to have such a webinar presentations related to this finance in future.
Why should we?
The presentation is good. Yeah, presentation is good. We would like to have such a finance related webinar in future.
Sure. That you can coordinate with me through this. Your Madam Ramanda, you can coordinate with me through her. So you can pass on to her, and then she can like that.
we always have like an open gate. If you have like any
Yeah.
suggestion to have next webinar, we will
Sure,
be
sure, sure.
happy to
Sure.
receive that.
Let me know. I look forward
have-
to such request. I look forward to such request, and I don't mind preparing for any such request. In fact, to tell you, Ratna, I was thinking it would be like sort of a physical meeting, because that would be more interesting. But no worries. This time it was a webinar, and hope to interact with you on many such topics. And as I said, it's a good to interact with you. And good to get your questions, and let's make it more exciting and more entertaining. And as I said, this is a basic level. This is a basic level. The things can get as complicated. Banking may not be that easy as it seems, but anyway, I hope I have been able to clarify the basic concept of trade finance.
You have
Sharon,
taught
do you
in
have any
a
question?
very detail-oriented way.
I believe Sharon has a question. Please feel free.
Yes, sir. From
Yes, Sharon. Go ahead.
Thank you so much. Just what I understood from this session, which I really enjoyed. I'm really beginner. So how important it is to have that proper terms and conditions. But okay, only my question is, okay, if you have default from the, I don't know, from any sides, what is the purpose bank that, you know, they will pay for that? So what they are getting from this? That's
See,
only
first of all, you have to understand, are you talking default in case of a LC?
Yes.
Okay, now see, LC document in front of you. If the buyer defaults, eventually, see, you are the buyer, you have to pay. Almaya is the buyer, Almaya has to pay. KC Limited is the seller, he has to receive the payment. Right? So default only if the buyer defaults, then it's an issue. Buyer defaults, in any case, NBF will have to pay, because an LC, they have endorsed it, they have confirmed it that they will pay when they take on LC application and they issue LC package. They will pay that advising bank, I will get my payment as a seller. But all the issuing bank will have a legal recourse, or first, usually banks may not go for a legal recourse in the first place, because legal takes time. And usually the recovery is not through legal, the recovery is only 17 cents to $1, right? Because there are a lot of legal charges and there's a lot of time consumed. So usually what they do, they usually have, customers usually give some form of collateral, either a cash margin or, some form of they may have mortgaged the house to a bank. They may have mortgaged some form of insurance plan to that we always take a collateral. So first we see how we can recover our money. First, talk to the customer. Say, what's your problem? Like, why did it happen? If they have some money in their cash accounts or bank balance, we take that, and then we go for the collateral. And then thirdly, we go for a legal recourse.
Sharon, is
Thank
it
you.
clear now?
Yes, thank you very much.
So do you have any question?
Yes, hello, boss.
Yeah,
Yes,
tell
please
me.
go ahead.
Please, this is under logistics. I just want to ask a question. What is the license you should have to export goods from UAE or import goods from UAE to another country?
See, now this is, as I said, this is not pertinent to this topic. But if you are interested, as I said, there are two types of licenses that you have here. One is a mainland license, which you incorporate a company in the mainland, which is in Dubai, the center, Abu Dhabi, the city, Sharjah, the city, and there are free zones. There are around 8 to 9 free zones in UAE, like the Sharjah free zone, Hamdia free zone, Ajman free zone, Jebel Ali free zone. You can incorporate your company there as well. You can have any form of incorporation, but just ensure when you prepare the memorandum of association, one of the activities should be that you are licensed to do a trading of what product, mention it. And if you're interested, I can share with you details of people who can help you with the company formation.
Okay. Thank you very much.
There are a lot of consultants around with a charge. They will help you get your company intact, so you don't need to worry about all this.
Okay. Thank you very
Mr.
much.
Khurram, I believe Rija have another question. Rija, please feel free to ask.
Actually, I don't have a question. The same, sir. I want to clarify this more clearly. That thing which he has mentioned people like the buyer, or they issue the letter of credit not in very easy way, like years of year statement, they are being monitored. And when they offer a letter of credit, they always give some kind of mortgages or some guarantee regarding like issuing the letter of credit. There's some amount of.
Okay. Listen, let me tell you. See, it's not. See, try to understand that the collateral that you take are not transaction specific. What happens is that first Almaya will come to NBF. They will say, we need your banking facilities with you. Almaya will first ask for their identification documents, like you apply for a credit card, you get the your personal identification document. Or in this case, because it's a company, it's Almaya supermarket, they will ask for the incorporation documents. They will ask for their letter, the owner's passport copy, and everything about the company. Then the Almaya will have the bank will do a due diligence on the company, right? Is the Almaya fine? Are the market checks fine? Is Al Ittihad Credit Bureau report fine? Various market check all are done. Then we will give them, okay, fine, we will give you 5 million dirham worth of LC facilities, but you have to give us 10% cash margin. Okay, you have the owners have a house somewhere in Marina, please mortgage us to the bank. We will give 5 million the dirham worth of LC facilities based on some form of collateral. It's not transaction specific. Out of the 5 million, 1 million LC they opened for KC Limited. 2 million they can open for you can say what Al Ittihad Credit Bureau, Ittihad Airways. 1 million they can have for Emirates, like that. Are you with me? So when the customer defaults, he will not default on just my transaction, he will default on all transactions. I hope I'm clear.
Yeah, you said that he will not be defaulted in one transaction.
Yeah, it's not very, yeah, like for example, you may have, like, all of you, if you have a credit card or if you don't pay your bill, DIVA bill, in your Al Ittihad Credit Bureau report, you will be shown as you have paid, delayed the payment and this and that. And when you take it to a bank, the bank will not say, okay, fine, so you have not paid your DIVA bill or your telephone bill, so you are less of a criminal than somebody who has got a bounce check. It's all, when you default fully. It's like it's considered in totality. It's not considered partly. I hope I'm clear. Like you default by $1, you default by $100. It's a default.
Okay.
Right? And if you have given a collateral, it's not, as long as it belongs to you and as long as you have defaulted on any of your payment, that collateral could be apprehended. It's not I gave the collateral for the LC of KC. I did not give this collateral for LC of Emirates Airline. You default, bank will get after you.
Understood.
Is there any question?
Question?
Sure, Liz.
Yes.
Yeah,
please, I have a scenario.
Okay.
I have a company in the UAE, in Free Zone, Fujairah.
Okay.
A general trade license.
Okay.
Whereby I can do brokerage. Now
okay.
I have a customer in Africa, in Gabon, who want to buy tons of rice from Brazil. I am the brokerage. I am the UAE. And the importer want to buy through LC. Now, me also, I need to collect my commission. How does it gonna be?
Okay, see, again, this thing is, does not pertain to this thing. But I will tell you, if you don't know the buyer, so usually what consultants do, they take half the. If you have decided on the percentage of commission, you must have decided on the percent of commission beforehand. So half of it is taken before and half they take after the transaction is completed. Are you with me?
Yes, I got your word.
So half they will take before and half they will take after. But in either case, you need to ensure, like, do the buyer and the seller, do they know each other well? Usually they don't. That's why the broker is involved.
Yes, they don't. They don't.
As long as they don't, then you have some chance. As long as they don't, then you have a chance. If they do, then that would be a challenge.
All right. Now, I asked a question before. Which are the bank in Africa who can initiate LC?
See, I will see to tell you the truth. Now, I refrain from recommending. I refrain from recommending any particular bank because that could be a conflict of interest for my own profession, right? So what I suggest is that we can take up this conversation like one-to-one, so that will be easier.
All right, I got you well. I got you well.
Yes, I also work in a bank, so now I start saying, this is good, this doctor is good, this doctor is bad. So
yeah,
so try to get a conflict of interest for me as well. So and so hope thanks for understanding.
Yeah, I got you well. That's normal. I'm professional. Thank you.
Thank you, sir. Is there any questions? I believe we are done. Thank you so much, Mr. Khurram.
Thank you, everybody. It was nice talking and interacting with you. Hope to see you soon. Thank you, Ravana, for all the coordination and cooperation.
Thank you so much. We already appreciate this grateful, a great webinar to get more information regarding to the trade finance. Thank you all for your attendance, and we will make sure that you will receive an email from us regarding to the recorded video and the presentation too. Thank you so much.
And Ravana, do share the recorded video with me as well. Let me see how I look while talking. Okay.
Thank you so much.
Thank you. Thanks a lot. Thank you, everybody. Bye.